Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin. It has taken a rather considerable move from around $10,000 within the last 24 hours or so down to, at present time, 8,600. But note that there was a temporary crash down to around 8,100, which corresponds closely to the 20-week moving average. So this channel is focused on these macro level moves, not individual day trading. But we just want to get an idea of what this move could mean if we continue heading down and how you could prepare accordingly. So go ahead and subscribe to the channel if you guys like the content, if you want to follow along for this market cycle. We'll be providing, basically daily updates for the most part. So go ahead and subscribe. Check out the Telegram channel. You can find it in the description below. We have around 3,200 people, so go ahead and check that out. We've talked here extensively about the 20-week moving average, mainly because if you look at history, it tends to be our support line in a bull market and tends to be our resistance line in a bear market. When we get above it, we tend to do well. When we get below it, Bitcoin tends to bleed for a while. Not only does Bitcoin tend to bleed, but the thesis that we've set forth for many coins, not all coins, but most coins, is that when Bitcoin drops below the 20-week moving average, this is when you really, historically speaking, this is not financial advice, but historically speaking, altcoins tend to bleed significantly, not only with respect to fiat, but with respect to Bitcoin, when it's below the 20-week moving average. Okay. Now, Ethereum, which I don't consider Ethereum an altcoin, it also tends to bleed with respect to Bitcoin when Bitcoin goes below the 20-week moving average. So, if you're wondering how you could prepare for something like this, well, the idea is to have stop losses set in the instance that we go below the 20-week moving average. If you see us start to head down, then most likely most coins are going to bleed with respect to Bitcoin. And if you say just took this approach and just stuck with it, without thinking about what happens in between, then for Ethereum anyways, it's been correct 6 out of 6 times. So with that said, there's no guarantee that we're going to fall through the 20-week moving average. At some point, Bitcoin has to correct back to it. We're not going to stay above it for the duration of the bull market. If you go back and look at the last bull market, we had several crashes, if you want to call them that, back to the 20-week moving average. So we're going to just quickly show you here some of these crashes. So from here, if we were to take, say, this rally up to the peak and look down, we're talking about a 27% crash. And guess where it stopped? It stopped at the 20-week moving average. We had another crash. So this was in around February of 2016. In June of 2016, we had a rally, and then we came back down, and then we crashed back down to the 20-week moving average. It's basically a shout out back to that video where the guy, this was from years ago, I don't know if you've seen it, but the guy just talks about how, the one thing that is for certain is that Bitcoin is going to crash. So it's one thing you can take to the bank in a sense. It will crash. The question is what is it doing between those crashes? So then again, we had a move up to, we rallied off the 20-week in March of 2017, and then we crashed back down to the 20-week moving average at around negative 24%. So you can see negative 26, negative 26, negative 24. We had a different one. We crashed down to the 20-week again at negative 38. Another one a few months later, and it crashed down at negative 35%, negative 36%. Then finally, you note that each of these crashes stopped at the 20-week moving average. But guess what? This time it didn't. The final time in this market cycle, when it came up to the peak at around $20,000 and it came crashing down, it actually came down a full 70% at the bottom of that wick. But by the time it had gone below the 20-week moving average, it was already over 50%. So one of the things you can note is that in the bull market, there was never a crash more than 40%. So I would say, we never saw anything at least 50% or higher, not until the party was over. And when you see this happen, when you see us come down below the 20-week and start closing weekly candles below it, then more than likely the party is over. And if you're still in and you're trying to hold on for dear life, you're probably just going to end up losing a lot more money. Now, this is not financial advice. Obviously, I just want to reiterate that Bitcoin will crash. We know that it's going to crash. On our route to six figures over the next, say, 3 years, I anticipate it occurring in 2023. We've talked extensively about lengthening cycles. We're essentially in the contraction phase of annualized volatility. I'll try to make a video about that tomorrow where we look at these buy-in prices over an annualized time frame. We're contracting, and again, we're likely going to expand. But each contraction period gets longer. And 2018, 2019, and 2020 are all part of the contraction of this cycle. So what we're expecting, ultimately, is to hold the 20-week moving average at some point for the bull market to get kicked off into full gear. Now, whether that happens now is pretty much irrelevant. Who cares? What have we said on this channel for a year now? For a year now, we've said that 2019, 2020, and likely, at least the first half of 2021 are probably going to be the accumulation years. The best time to buy Bitcoin probably for the rest of your life, because as we get into, say, assuming that we go off into a bull run by 2023 and then we see a multi-year retracement and maybe another accumulation phase between, say, $30,000 and $50,000 off in, say, 2025, 2026, that time frame, then we know that we're going to see diminishing returns on lengthening cycles. So people buying in 5 years from now are going to have to even wait longer. So, in one sense, this is the time of your life in terms of investing in Bitcoin, because it's likely only going to get lengthier and not as much volatility as we continue to move forward through time. So what you want to do is you're not concerned, and I'll just reiterate again, you're not concerned with day-to-day price movements in this year. 2020 is just about accumulation. In fact, it's better as long as the price stays low for as long as possible. You see how quickly Bitcoin can rally. If we take a measured move from just, say, the wick in March to the wick we saw up here, we went up 162% in less than 2 months. So if you're thinking about your futuristic self in 2023, where you're selling, at this new paradigm shift in the Bitcoin market, if you look back at 2020, more than likely you're going to hope that you could have bought Bitcoin for as cheap as possible for as long as possible. So are we saying we're going to break the 20 week? We're not saying that. We might not break it. We might hold it as support. We've certainly had a decent level of volatility this market cycle, especially with this move here and all these different moves that we've had. This is the third time during this market cycle that we're going to test the 20-week moving average. And we'll see what happens. Again, if you are holding a lot of different coins, as you've seen, there's a lot of people in the Telegram group that are talking about, okay, well, why hold Bitcoin when there's no utility to it? Why hold Bitcoin when essentially blah blah blah, whatever it might be? Well, Bitcoin is the market mover. And we've said this before. The cold hard truth is that most people don't care about what the latest and greatest tech stack is on altcoin number 4,375. They just don't. Most people don't care about that. If it doesn't matter if you have 2,000 operating mainnets out there on all these different coins, people don't use it. It's not really worth anything, to be completely honest. Whereas Bitcoin has been around for 11 years. The Genesis block was January 3rd, 2009. It is the most trusted blockchain. It is, it's the market mover. So one thing you can rest assured is that in a move, if cryptocurrency is moving, it's because Bitcoin has moved. Okay? If Bitcoin moves, it doesn't mean the rest of the coins are moving. So remember that. And I can tell you now that at some point in the next 3 years or so, I would say for maybe 2 years in terms of what I'm about to say. So in some point in the next 2 years, Bitcoin will likely make a move to 20K. And in that time, you will not want to miss out on it, because when it happens, a lot of the rest of the market will likely be standing still, waiting to see what Bitcoin does. in the same way it did it this time around. If you notice, Bitcoin has been moving. We've said that when Bitcoin crosses the 20-week, altcoins tend to do better than when Bitcoin's below the 20-week, but at least for a few weeks, Bitcoin does tend to outperform the market. It starts to move the market. Other coins kind of lag behind. They try to see what Bitcoin is going to do because, with the volatility that there is, with Bitcoin dropping, 10% in about an hour, or even, no, I think it dropped more than that. It probably dropped like 12 to 15% within about 30 minutes at one point today. It's hard for these coins to regain the confidence they need, for investors to regain the confidence they need to start putting money back into these coins. They're mainly chasing what Bitcoin is doing, and if Bitcoin starts retracing, then that doesn't typically work out well for altcoins, especially if you see Bitcoin drop below the 20-week moving average. So, again, at some point in the next 2 years, we're likely going to see a move to 20K. That's obviously likely. It's more than likely going to occur once Bitcoin has held the 20-week moving average for several weeks or several months. More than likely, it needs to hold it for several months before we're going to have that type of confidence to push us back to $20,000. When Bitcoin holds the 20-week moving average as support, a lot of coins aren't going to see remarkable returns. Many altcoins in 2016 or 2015, when Bitcoin got above the 20-week and stayed above the 20-week for the next several years, most of those coins didn't really do a whole lot. Sure, you might see 20% gains, 50% gains, but when you're talking about, say, like a 10x return, most coins did not see that when Bitcoin got above the 20-week. A coin that did move once Bitcoin held the 20-week moving average 3 months later was Ethereum. A lot of coins did not move during that time. Ethereum did move significantly. It went up around 1,800%, in fact, when Bitcoin held the 20-week moving average. So what you're going to want to look for, again, is to see us hold the line. We need to hold this line to slowly rebuild confidence in the total cryptocurrency market. Because right now we're essentially, a lot of people are thinking, alts are dead, and they're dead until they're not dead anymore, and then people will say, see, I told you so, and the people saying it was dead will disappear, and then at some point those altcoins will retrace and correct and drop by 80 to 90%, and then the people that like to say that altcoins are dead, they'll come back out in droves, and we'll repeat the cycle over and over and over and over. Once you've lived through enough of these cycles, you've seen it enough to recognize the emotions that come out. It's just par for the course in a sense. So if we drop below the 20-week, I would say the next likely area that we might drop to would be the 100-week moving average. So it's currently at around $7,100. Dropping below that would probably take us back down to the 200-week moving average, around $5,800. Let me switch over to the BLX. It takes it a while to update, which is why the price is higher. But here you can see, the 200-week is at $5,780, the 100-week is at $7,116, and the 20-week is at $8,000. So 8,000 will be our, a pretty critical level. So I want to say, if you're tired of investing in cryptocurrency and not really sure what you're doing, you're just kind of going with your emotions for the day, and you're getting burned over and over and over again. You're capitulating at the bottoms, you're buying at the top, and you're just not really sure what to do. Then I do have a premium list. It's you can go to intothecryptoverse.com. You can get access to the premium list, which includes a lot of different things. We have weekly newsletters that'll give you the risk metrics for Bitcoin, Ethereum, the S&P 500, Cardano. I'm going to be adding more there. You can use this risk metric to dynamically move in and out of the market. And we have it set up for conservative strategies, moderate strategies, and aggressive risk tolerance strategies. So by identifying where you are, and we can help figure that out, where you would fit in, then this can help give you some sense to your investing in the market, and it helps you in terms of not worrying about the day-to-day. You just follow the plan, you stick to it, you don't get greedy when prices go up too high. You do what you said you were going to do, and you just look at the numbers. That's all you do. In addition to that, you will get a weekly newsletter that has all these risk levels. It will have updates to various regression charts, and other types of analysis. So check out the website intothecryptoverse.com. If you want to join, it's just $49 a month. Obviously, you can cancel at any time. If you would prefer, you can pay with crypto, but would need to pay for 6 to 12 months. And if you do, then you'll get a 5 to 10% discount. I think for the 12 months, it's actually a little bit more than 10%. But check that out if you think you'd be interested. And once you join, you'll also get a welcome email that'll link you to a private Telegram group where we have a lot of really great discussions. It's a good way to filter out the noise from some of the larger groups that exist. There are around 170 people in the group, so I think it's a pretty good group to be in. So check that out, please, if you're looking for a way to get into the market during a key time that you want to be accumulating your position, and that way you're prepared for whatever this next market cycle brings. You're not going to be worried about the day-to-day moves. So just to reiterate on everything we've talked about, a lot of people are, I'm sure, worried about the price of Bitcoin. But again, guys, if you follow this channel, we're not a day trading channel. We're focused on the people that are accumulating Bitcoin during these accumulation years. And in 2 or 3 years, it's going to be, probably 3 years in 2023 or so, it's going to be a very exciting time, I think, because we're going to be taking all of that cryptocurrency that you accumulated, and hopefully a large portion of it, I would hope, would be Bitcoin. Not financial advice, but you'll be taking that Bitcoin in 3 years or so, and for every extra amount that you've accumulated during these down years, you'll have that much more to sell later on to the dumb money that'll flood the market when Bitcoin reaches for the stars and heads off to 6 figures. Because when it happens, it's going to happen quickly. What we'll likely see is a slow run up to $20,000 that I think would likely happen by the end of 2021, early 2022. Once we get to $20,000, that'll probably hold resistance for some time. We'll move above it. You might see us move up to $30,000 or $40,000. Maybe it'll crash back down to $20,000. It's going to be a long ride. It's going to be a bumpy road. But as long as we stay diligent, you take profits when the risk level gets too high, it's going to end up working out better than just running into this market cycle without a plan. Because if you don't have a plan, you're probably going to miss out on some life-changing opportunities here. Because the next opportunity to take advantage of this is going to be it's going to take a lot longer to go through these cycles. So don't squander this opportunity that you have to really sit down and focus on accumulating Bitcoin during these years. So, I know I've rambled on a little bit. I hope you guys enjoy the channel. Please subscribe to the YouTube channel if you like the content, if you want to be here for the ride that we're going to be on for the next several years. Join the premium list if you're looking for, some premium features. And it also has a Google Sheets document that'll give you access to the risk metric in real time. So you can access it and then export it to your own dashboard if you want, or you don't have to. You can just view it on the Google Sheet. And this will help you figure out how to dynamically dollar cost average your buys and sells. And if you're not sure what that means, we have private YouTube videos for those who want to dive deeper into that. I've started making a private video for the people that support the channel that are on the premium list every Sunday. So it's Sunday my time. I think it corresponds to Monday for a lot of people, but it's Sunday my time. I usually post the video, the private video, and a weekly newsletter that they accompany each other. So if you guys like the videos, just know that I do make more of them that are private and only for people on the premium list. So hope you guys enjoyed the content, and thanks for tuning in, and I will see you next time. Bye.